SBI card betters industry average on total spend and cards issued in August. Total cards rise by 2% in spends, and we have the stock higher by almost 3%.
Mahindra Logistics buys Rivingo's B2B express business for a sum of around 225 crore rupees. Will aid revenue growth by around 8 to around 9%. The stock opens with a gap up, and though has given up some part of those gains.
HCC completes its debt resolution and will reduce its debt by 3,575 crores, will save 400 crores in annual interest payments.
The Tamil Nadu state government approves an ordinance to ban online gaming in the state. Nazara Tech is down 3.5%. Hello and welcome to Chartbusters. Well, plenty to talk about. The markets have come off the high point of the day. We had made this point earlier today that chasing the gap up opening may not be such a good idea. We were up close to 150 points at one point of time. Now we're up close to around 25 to around 30 points. Keep in mind, this crucial zone is 16,950 to around 17,000. We put a fight yesterday. Let's see whether or not the bulls are up for it today. Let's get straight, though, to our first corporate on the show, Balaji Mines. Well, the company has started commercial production of a couple of new products. They've also announced capex of around 200 to 220 crores. To understand these developments, how it will impact business, well, we're joined by the Managing Director, Mr. Ram Reddy. Hi, Mr. Reddy. Nigel on this side. Always good speaking to you, sir. Give us a couple of details. You have started production of this DMC PC as well as the PG plant. Could you tell us what kind of capacity utilization levels will you function at? Are you already booked out? And also, what is the revenue potential from this unit? Go ahead.
See, this plant we just started 4-5 days back. We got the consent to operate from the government of Maharashtra 3 days back. Probably from tomorrow onwards, we will start selling these products. So one is the dimethyl carbonate, and other is the propylene glycol and propylene carbonate. All these products put together about 30,000 tons capacity per annum. And if everything goes well, we expect about 150 to 200 crores revenues for the annual if it goes at the peak levels.
50 to 200.
100 expansions.
Yeah, so just a minute, let's finish this first. The DMC, PC and PG together is 30,000 tons, as you said. And the peak revenues from here will be 150 to 200 crores. Are we getting that correct?
Yes.
So for this year, what will be the contribution from both these two, given that it will take time, right, to ramp up, etc.?
We have 6 months only left. Maybe 100 crores we should be in a position to get.
So 100 crores is something that you can get in the 6 months that you have in this year, and then go to 150 to 200 odd crores. You know, I was looking at your list of raw materials, and methanol is an important one. It's imported, largely energy intensive as well. So just wanted to know, have the prices of methanol increased, and you know, what are you doing to mitigate that? Are you passing on those prices, taking a hit on the margins, or looking at alternative areas of sourcing?
No, not increased. We are at a stable level. Last 6 months, we have seen the prices between 25 to 27 rupees. Still, it is yesterday's price is 27 in the Mumbai market. There is no increase. Like earlier years, we have seen the prices more than 30 rupees. And we are comfortable with the current prices. Only thing is the API pharma was not doing well for the past 1 to 2 months. So that is a little worried. But now we see from this month onwards, there's a market picking up for the API as well. And we expect in the coming quarters, there should be good offtakes from these fields like API and pharma market.
All right, just a couple of more questions, Mr. Reddy, on this capacity that's gone live. 150 to 200 crores is what you can do at its peak. I believe that, DMC is a high margin business, right? What kind of margins will you get from here? Currently, as a company, you're doing 31, 32%. So once you hit the 150, 200 crores, what kind of margins can you do? Will it be better than what you're doing now?
No, it's very difficult to say today. See, any product you start, it will take at least 6 months time to take it to the peak levels and to get exact margins. Only we will be in a position to tell you in the next year what will be the result of these new products, whether they will give the higher margins than the existing products or not. We'll have to wait for at least 2 quarters.
Okay, so in at least 2 quarters, you will know a sustainable margin for this. But there's some other capex that you've done as well, right? There's a butylamine plant that you've announced. There's an acetonitrile plant as well, around 300 to 400 odd crores. What could the revenue potential of that be? When does that come on stream?
Yes, we have another 4 products in the line, out of which we already started construction for the methylamines, about 40,000 tons, and dimethyl hydrofluoride about 7,500 tons. These 2 plants will come on stream in next 7-8 months. After this, we have put up the papers for the 2 other products. One is N-butylamine and the other one is dimethyl formamide and acetonitrile also. We have asked for the listing. Probably these will take some time for getting the clearance from the government of India. After that, probably in coming 2-3 years, as I guided earlier, by 2025-26, we should touch the mark of 4,000 crores of the annual turnover.
Crores. All right. I'm having a little bit of a scratchy line with you, Mr. Reddy, but I just want to confirm a couple of details. Earlier, you said that volume growth is likely to be 10 to around 15%, and you'll end this year with revenues of close to 2,400 to 2,500 crores. Do you stick to that guidance? Are you seeing any kind of slowdown, or are you sticking to that?
As of now, yes, it is, because the last month we have seen little slow, but now we have seen improvement. We expect that coming 6 months should cover whatever the shortfall, and we expect that we should finish the minimum 24,500 crores on consolidated basis.
Volumes of around 10 to 15%?
Yeah, 2,400 to 2,500 crores annual turnover, we should be in a position to complete.
Okay. And what about the Balaji Specialty Chemicals IPO? How many approvals have you got so far? When does, when do you plan to list it, so to say, or when does the IPO open?
I'm sorry, I cannot talk on that because we have submitted the papers to the SEBI. We are expecting the approval. Once we get the approvals, once we get some clearances from my legal, I'll be in a position to talk on that.
700 to 750 crore revenue target that you had given on this business stays, right? Or you can do better than that?
Thank you.
No. All right. Can that guidance you gave us earlier on the specialty business of 700 to 750 crores, you're holding on to that as well, right?
Yes.
Okay. And final question, margins you have been doing around 32% in the first quarter. Will it be in this vicinity itself?
Yeah. See, these 30-32%, there was some special bonus types of thing we have seen in the Balaji Amines. But you can't expect these margins every time. It's sustainable, I was telling earlier also, will be between 24 to 26%. EBITDAs will be sustainable.
Margins of 24 to 26% for Balaji Amines.
Yes.
It's good speaking to you, Mr. Reddy. Thanks so much for stopping by. We look forward to having a chat with you at the end of this quarter when you join in for your numbers. For the time being, we've got a fair bit of clarity. Well, for the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat joins us to tell us about a company that he's tracking very closely. Bharat?
We'll speak on Relaxo Footwears Limited. Post 2 years of disruptions owing to COVID-19, people mobility has improved, which is expected to lead to increased demand for footwear. There was channel destocking post increase in the GST rates on footwear below 1,000 rupee MRP from 5% to 12% in the month of January, which had impacted the sales for Relaxo. However, the channel restocking from here on will help to improve the sales for Relaxo. The raw material prices had shot up post Russia-Ukraine crisis in the month of February. However, since then, the raw material prices have fallen. The crude prices has corrected by about 30%, while the rubber prices have also corrected by about 12%, which is expected to lead to margin improvement for Relaxo. The trend of earnings decline, which Relaxo witnessed over the past 3 quarters, is expected to reverse. We expect earnings growth from the current quarter. The company is enhancing its distribution reach in the under-penetrated markets of South and West India. In FY22, the company enhanced its overall distribution reach by about 20%. The company also enhanced capacity at its Bhiwadi plant in Rajasthan. There is scope of market share gains from unorganized players, which would be beneficial for Relaxo. At current market price, the stock is trading at 63 times its FY24 projected earnings. Investors can add the stock in the portfolio.
All right, with that, we'll take a short break. On the other side, we'll get you the management of Advanced Enzymes. Stay tuned.
thoughtfully.
Welcome back. As promised, let's get chatting with the management of Advanced Enzyme. The stock is in focus recently because it was the subject of a big block deal where Nalanda India Equity Fund bought almost 29 lakh shares in the company. They're also betting big on the animal healthcare business. That's Advanced Enzyme. And we have with us the whole-time director, Mukund Kabra, joining us. Thanks a lot, Mr. Kabra, for joining in. And, since you're betting big on the animal healthcare business as well, it's just a two-part question. One, animal healthcare in FY22 was about 10% of your business. How much does it go to, say, in the next couple of years? And secondly, is there any thing that you guys are doing with regards to the lumpy skin disease? Because everyone's talking about that in, the cow market, etc. So just wanted to understand whether you have anything to do with that or not. And the 10% contribution that comes in from healthcare, animal healthcare, how much does that go to?
So we are doing quite good in the animal healthcare at this point of time. We are really expanding in the Asian markets as well as in the US. We already signed the contract for the distribution in the US. We expect in the next 2 years the revenue will significantly grow, but in terms of percentage of total revenue, it's difficult, but certainly this is going to be one of our growth area in the coming days.
Okay.
And in terms of like lumpy disease, this is a more or less viral disease. We do have very good solutions on the virals, but we still need to do the trials on that. We are in a process of doing those trials right now.
Okay. All right. Hi, Mr. Kabra. So we'll keep an eye on this animal healthcare business. But you must be having a longer-term view, right? Do you think it'll go to 20% or not? Or you don't want to give a number as of now?
So we believe that in the longer run, in the next 3 to 5 years, we should be somewhere around 150 to 200 CR in this area. But in terms of total number of percentage, it may be difficult for me to tell you exact number on the percentage part.
Works for us. In the next 3 to 4 years, animal healthcare business will be 150 to 200 crores. We've got that. All right, Mr. Kabra, another point that I wanted to ask you on is the promoter entity sold some stake, right? And in the last few years, it's come down from around 58%, 59%, closer to around 50%. What's the intent out here? I recall in the past, there was one part of the promoter entity that was involved in the business, one was not involved, and there's classification, reclassification. Short point shareholders want to know is, where does the promoter holding settle at? If you could give us a sense.
So as you know, like there were two promoters. One promoter is in the active business, one promoter is not. So the holding which was being sold and which was being bought by the Nalanda is from the promoter who is not in the active business. So currently their holding is come down to somewhere around 7.1 or 7.2% from 10%. Probably that's I can't comment whether it will be there or it will not be there in the coming days.
That remains an overhang on the stock, right? Because 10% is what they held, 7.2% is what they still hold, and they're constantly selling. That would continue to cause some downward pressure on the stock, right? Because there would be further supply. I understand that you cannot comment on what their plan is, but this would be an overhang, right? Would you worry about this?
We don't worry about it. We believe more to do in the business. Stock will do as it will come up.
Okay.
But you won't rule out the possibility of them selling the remaining 7.2% as well?
I don't have any control over that.
Active promoter does the active promoter want to buy from the non-active promoter, this 7%?
They did buy in the past 5%.
Yeah.
I'm not sure whether they will go and buy it or not because it's between the two promoters.
Okay.
All right. Okay. So we will monitor this situation as it goes along. But as far as your business is concerned, you do have a significant exposure to the USA. Everyone's talking about a recession fear in the USA itself. What is your sense from business on ground out there? Could there be a problem this year?
So, yes, you're right. On the US recession, there will be some impact on the nutraceutical area, but we are fortunate to have a very diversified business. With this kind of a recession, we are seeing very good demand in the food business and animal health business. So the advantage what we have is a lot of diversification in the food area, in the nutraceutical area, in the pharma area. and that just nullifies the impact. At the same time, the rupee depreciation gives us a lot of cushion for this. So I don't see a major impact which is going to come up. But yes, nutraceutical business, there will be slight impact.
Okay. All right. Mr. Kabra, let's get a couple of numbers going then. I think you've indicated that the rupee depreciation is good for your business, right? Net, put everything together?
That is right.
Okay. For this year, what kind of a number are you looking at in terms of revenue growth? You're seeing some traction in the animal healthcare business, which is a smaller part of your business as of now. Last year, you did around 530 crores. So that's the first part. And the second part is your margins. At some point of time, it was more than 40%. That's dwindled down to the mid-20s. On a steady state basis, what is the number you're looking at? I recall you guiding that there'll be a margin improvement from Q2. Sticking to that?
So yes, sticking to that, there will be a margin improvement. We will go back to our own trajectory, which was like 40 to 48%, but it will be a gradual thing. What has happened is like a lot of logistic costs and the raw material prices have just impacted the margins in the last 2-3 quarters, but this can be the worst. I don't see anything worse from this. There will be always improvement. We are a research company and we continuously do the research. So these impacts we will absorb with the research, what we are doing at this point of time, and slowly and gradually we'll come back to our margin.
Could you quantify? I mean, you said that you will see improvement. Would that be 100, 200, 300 basis points? And then gradually you said you'll go back to earlier levels. What do you imply by earlier levels? Because back in the day, you've also done 45%.
So we always say that our normal level is between 40 to 48%. And we believe that that should be our normal levels.
40 to 48%?
Yeah, so in the past also we used to maintain our margin between 40 to 48.
All right, got it. All right. And you mentioned R&D as a percentage of sales. I think it used to be 5%, right?
Yes,
what is that number likely to stabilize at?
We will have more spending in the R&D as we move on. In the next 2 to 3 years, we will be somewhere around spending 7 to 8% on our R&D.
Okay.
We are coming up with a new R&D center as well. Right now, its construction has already started. We acquired the land, I guess, 2-3 years back, and now we expect next year probably we should start the first phase of our R&D centers. So
that's interesting.
We expect our R&D will go up, but that we are an R&D company, and we always believe that we should spend more money on that.
Right, we take that point. You will be spending a little more on R&D, but that will be more than made up for you by the margins that you're guiding for going ahead as well. But final question then, you have guided for your animal business to be about 150 to 200 crores, but you've also gotten into B2C in the first quarter that did about $1 million in terms of revenue. What's the outlook here? How much can that business scale up to, say, in the next 3 to 5 years?
So the B2C segment is mainly coming from the US business at this point of time. We do have an ambitious target on the B2C in the US. In India, we are still working on it. Maybe from next year onwards, we will start getting some of the revenues.
What is the ambitious target in the US? Could you quantify that? And are you looking at any acquisitions there?
We are constantly looking for the acquisitions, which suits to us on the front end, right? Okay. Will it materialize this? Will it not materialize? It's very difficult to comment. But in the next 5 years, we want to reach somewhere around 20 million. So let's say how do we...
Next 5 years, 20 million per annum is what you're gunning for in the B2C business.
That's right.
Good speaking to you, Mr. Kabra. We look forward to chatting up with you rather soon. Thanks so much for giving clarity to all of our viewers as well as your shareholders. Slip into a short break. I'm back. Continue our focus on the markets.